Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and here we are on a Monday, the 20th of May, 2024. Well, what we got here this morning? What have we got here this morning? I'm trying to just, I've got a bunch of these because in order for me to trade them now, I've got multiple different accounts now. So I want to make sure I can trade them on TradingView. So I'm looking at a whole bunch of different types here. Just make sure we're still live. We are. Paul is first through the door this morning, and Erica, good morning, good morning. All right, so yes, this morning. Right now, look at us 53.23. I'd like to see a return back to the top of this daily inversion here to go higher. But we're at a premium. So you want to see something significant on the downside in a or upside on the chart. So if we look at the hourly here, we haven't quite even hit the hourly breaker here. Price is broken to the downside. We've just come up inside the body in this fair value gap here on the hourly. See that? So I would expect to see some more downside from here. $53.23, which is right there. That's what I was calling for on the daily. So we're between these two right now. Yeah, we're literally between the premium and discount inside that larger range here. So I would imagine this is the next point. We can get through here. Look for this down here. Dow Jones. Dow Jones, I'm looking for 40.091. So we'll return back to this inversion fair value gap up top here on the daily. We get through this candle's low and come back into this candle or the bottom of the fair value gap here on the daily or on the 15-minute, which would be this order block here. Not super clean for sure this morning. We're still inside this fair value gap here and this busy here or civvy here. So wait and see on the rest of the markets. We could see a return back into the fair value gap here as a fill, just a run back up and down inside the inside of this. So if we're going to go higher today, look for 104.84. I would put some higher on Canadian dollar. We have a swing low here. Yeah, you're in a small range. You'd have to break this high. See some break in structure, change of direction, break in structure here, start moving higher. It's kind of just I don't know, a 5 minute. Yeah, that would support an upside on the American dollar. We get this close above here, through the mean threshold here, above this high here. Look for the highs and look for this imbalance. That's small internal range liquidity from high to low. You're probably looking at the premium up in here. We've now swept this low here. If we break this high, the fair value gap, look for return back into here to go higher inside this small range. If you start clearing that out, then you get higher objectives, obviously, but right now, just inside that range, you'd have to get 50% or less. There's 50% there, so you'd have to get in on this one here. Use your fib tool to scale out or look for the premium array, like to like, the reversal here. Body breaks down below it, comes back into it, goes short, aiming for the lows. Now that we've taken the lows to run back up into that range, look for candle to break this high, return into here to go higher. Aussie dollar. On the 1 hour, you can see how we have the reversal here. Body breaks down below this candle's low. We return back into this candle. You want this to stay open if you want a nice little breakaway gap. And that's what you got there for continuation on the downside. And now that this fair value gap is filled, you look for an opportunity to see a reversal. Here's your reversal. All the way back into the lowest down closed candle. Now for me, we have also this one here. So if we have a body that trades below that, I wait for it to trade back above and through it again. Here, comes back, finally clips it here, continue with the upside, pull your fib tool from here to here, 50, blah, blah, blah. If you're using that just inside the small range here, look for, if your entry is right here, right off this inversion here, comes back to it, 50%, Move yourself to break even, take half off. Continue. 62, just keep bumping it up. What do we got here? Japanese yen, I'd like to see that. Good price rebalance, come back up inside. I want to see this candle here get below this low, break this, get below that low, come back up, find some support inside this or this fair value gap inversion. You want it to now that it's inverting, we want to see this close below here today, tomorrow trade back into it to go short. We're looking for that, something like that in Japanese yen. Oil, what do we got in oil? We have a body breaking above here, coming back. If you find support here, make sure it's in a discount array. If you can revisit this here, look for a run back up into here. And your buy side liquidities here. And there's a whole bunch up here as well. That's all the mess I put on the charts for that. I want to see this get back into here. Yeah, you could. It's probably going to reach this area before it gives you an opportunity to get in there, but that's what we're looking for. And you're looking for up there, so at least I'm called the right direction. Okay, I have to come back and play with that again more, but that's kind of like the objective we'd be looking for if we could have got in there. You guys aren't into ETFs. Gold. You get a body break this. Yeah, we've now turned it back into it. We're going higher. So we're going higher. And now you keep your eye on these little fair value gaps on the side here. You're in a premium. So do you want to pay a premium to go higher? Or do we have a wick that we've now taken that high out? This now becomes an area of interest for me. Right here. That's the daily. An hour. The gap here. Body trades below it here. You're looking for this to run up one more time. Fill this. Get inside that little fair value gap there on the hourly. You want to see this come back up here, hit here, and then go short from there. Aiming for these lows. Aiming for that fair value gap in the daily. That's where I'd be aiming inside there. For gold. Silver. This is the 1 hour on silver. Same kind of principle here. You want silver to come back into here. And you're just about to hit it now. So anywhere up inside that little box. Stop losses up here. Continuation on the downside. Palladium, as we were calling it a couple of weeks ago, returned into here. Now we're aiming for this objective here, and we're just hit it this morning, or just close to hitting it this morning. As an upside objective. I gave you guys that a couple of weeks ago. Or was it last week? Anyway, we're calling for this upside here, and we're slowly getting there. 1, 2, 3, 4, 5. So it must have been a couple of weeks ago when I drew that out. And that's coming to fruition. Bitcoin, where are we at Bitcoin? The low's taken out. Next candle, this candle's finally taken out with a body here. Return back inside it here for a short. Get anything here, you don't get anything off that one. It's too high in the range by the time you get to here to aim for that. So you got to return a retracement back into less than 50% of that range. I don't know what that ends up being. If you want a discount anyway, you'd have to get something that's below 50% of that range. And that would have been in here somewhere. This would have been one of those, because we didn't take out that high. You got to think, you want to see these occur above old highs like that. You want to see something sharp like this, right? And we didn't take that high out. So if you decided to go short there off of that being the inversion, you think is the swing point, but it's just an inversion. And you come back into it and you would decide to go short here, here, or here. You're looking for the optimum entry and you go here and it comes back, hits you and takes out your stop loss. You're on the wrong side of that. You come back inside. Now you can get on the right side of it. Continue higher, running for liquidity pool that's sitting right above you here. Jump up, splash in, splash, splash, splash. And now you're looking for Now that high has been taken, you want to see price trade back through here and into this candle, and then continue back on the downside, running back into this lower range here, or back into this reversal here. Because you got this one, and then you have this right here. So the body trades above these, all down close counts, no wicks. Trades back into them, goes higher. That's your inversion here. This is your fair value gap here. So you want to see it come back into this range. So I'd like to see it come from here back into here. So I'll draw that as a downside objective, just to come back to it a little bit later and see how we do. So anywhere from between here and here, anywhere inside that range, if we break that low. If we don't, we're still going higher. You're looking for this pool of liquidity up here, and then eventually back into that fair value gap in here. I'll put that one on here as well as an upside objective. So where are you inside that range? You want a nice discount to go higher. So you want to watch this, catch this reverse in here. And then your ideal entry, you want it to be down in here, so that if it trades below you, comes back to you. We're aiming for this one down here. So you can get out of that because you're on the wrong side of it. But if this does fight support and look for upside, you want to keep going, obviously above here or here. Look for these fair value gaps, kind of just scale yourself out on the larger range. But you're going to get back into a discount here to go higher. Soybeans on the daily. We've got all the way up into here. So if you're wrong, it goes through, it comes back to it. You can get out and go longer if soybeans is going for that high. If we're just tracing back, because we've traded below it here. Now, if you're just tracing back in here to fill the fair value gap, look for, so this will be level 1, 2, and 3 entry. Stop loss goes above here. We'll roll over and continue down to this objective. So you'll be going from here back to here. So I'm going to keep my eye on soybeans for the next couple of days and see if this is, we get a reaction off the top here. Or if we, theoretically, stop loss will be up here. We'll see if our stop loss gets taken. If we close above this, you want to get out right away because you're looking for the higher prices. And there is, they've already run the liquidity that's sitting here. And there's a small fair value gap above them too. So if we've just come back and found support off these old highs and we're going higher, we want to see it break through this, come back, find some support, and then you can go higher that way, or find support, come shorter here. Forget it. I just saw something else here. See this reversal, this inversion right here? We've just traded above it the other day. We've come back inside it. So yeah, we are looking for higher prices, but you're inside this one here as well. So higher prices, yeah, I'm looking for here. And for today, you're looking for soybeans to go today and tomorrow to go up higher. If this sets the high here and reverses on the week, then you're stuck inside this small consolidation for now. Corn, I'd like to see that come back in. Just clip this one more time for a short back into here. We've got a reversal going on here. I've got nothing in here that provides a level of other than this immediate rebalance of price here. It's a little short of that too. The low on that candle is 4614. High is 4604. Just short of one handle there. That would be enough. So I want to see it just come back, wick into this, and pull away right away to continue going lower. Otherwise, we're back into that whole run into the inversion here, and whether or not we get through the inversion or use the inversion to go lower. Ideally, I'd want to see just this order block or this breaker right here, last down close candle that runs out these old highs. That's a breaker. Right back to the mean threshold of this candle. So going lower. So ideally go up a little higher to go lower. I'd like to see it come back to 200.90 to go higher inside that range. Back up inside here. Found some support. Looking for now you're 50%. If you can get above here, you got a CAM model 1 entry to go along. Back up into here. We're going short on these guys still. Cocoa. And this is a slow drift down into this gap we've got here. Look for 50% of that gap. Same with this one. We're looking for natural gas. Finally starting to get a good lift off of that now. Tell you, if you bought natural gas back here, 14 bucks, you're up 30%. 30% already. Let's get back to natural gas. Our NASDAQ here. We're just about to start our open. Look at that reaction off of Friday's Fair Valley Gap open. Abs, you got something there, my friend. Get that one off that high. So we'll wait and see. How is everybody this morning? Good morning, huh? It's a TikTok or Talk. Thank you. Good morning. Smash the button, the like button, guys. Well, there's nothing to like yet. But if you do, smash the like button. Thank you very much. Dave, good morning. Dave and David. Tommy, welcome, my man. Welcome, welcome. Russell, good morning. Abs, good morning. Victor, trading. Look at the trading trio from France. Welcome, welcome. Fernando. Josaba. Good morning from Hungary. Good morning, Hungary. Here's the opening. Invest, good morning. Let's see it get through here. Oh, there's a huge delay there. Looks like we're just reacting off that hourly open candle. We take out this high here. Okay, now you want to see it come back in here, find some support off of this. Anywhere inside here is fine. Continue going higher. Look up in here. Good morning, one good trade. That was a perfect entry right there. Literally broke it, came down, slammed right into it perfectly. And that little abs. Do you see that abs? Do you see that Friday's fair value gap? Look at that, like right off of it. You got something there, man, I'm telling you. So your liquidity pool is sitting above here. Wow. Literally from one to the other, abs. If they say you haven't got something there, man, they're on crack. You could literally take this one that's sitting over here now and move it straight to here. It would be one and the same now because it literally opened up right. Same one. Oh, I have to do this. I could do this. I could make templates for these things. Go to Telegram there, Abs. I got a question for you. We'll put this on a different chart. Learned the hard way, no fair value gap, no trade. Yeah, there was a fair value gap right there. That's the one that precedes the swing this morning. We called that right here and then left. So I've taken out these highs. It's so close. So close to a 4 projection swing right there. See what the other one looks like. Excuse me. Where are we headed now? We are headed right here. I have to put lines on there. Good morning, Tristan. Shepard, good morning. I'd like to see it get up into here. And then give us a reaction and start coming back through here into this. Let's see what this upside hourly objective looks like. So change in direction, break in structure. That's what I'd like to see here. I wouldn't mind have seen that get back up to that premium array first. on the hourly. Okay, good. We're still going up. Well, that would have bombed. That would have been a bomber this morning. What an excellent entry. Just stellar. So now we're looking for higher prices. We're getting all through this already. Got rejection block now. If we don't settle on Looking for a reversal anywhere in here now. Wait for the 10 o'clock to set itself up. So 7 more minutes. We can see a run on this high. Pull back into the range, and then we get all that candy land there to reach for. Morning, Derek. Hope you all had a great weekend this weekend. Had lots of rain this weekend. I think now you start getting into the summer, you got to cut the grass every 3 days or so now. Every 3 or 4 days. It grows like a weed. It's incredible. It's nice and green though this time of year. Then when we start getting into the hot summers, it starts to go brown and starts dying off on us. That's our upside rejection block on the hourly. Look at a reaction you get here now. See, it becomes one of those areas of sensitivity. And then the high is going to be confusing morning for me why I'm up down. Yes. Hi Darren, how are you today? I'm great, thanks Jeremy for asking. I'm doing all right. Back's a little sore this morning, but I'm doing all right. Got my wife home today. It's awesome. She got a day off. It's a holiday today. I hope it's a holiday because she's late for work if she is. She's just getting up now. Craig, yeah, I'm looking to short if there's an opportunity. Otherwise, we're still long. Wait for 10 o'clock here, see what we get. That's the 50% off the wick on the hourly. If we drive through that, still looking for higher prices. I'd like to see the 10 o'clock. Take out that high. But if we get a nice reaction off that 50% right there. There's 10 o'clock. These lows. Okay, now I'll start going shorter. We take out, we gotta get below here to go short though. Otherwise it's still higher. And if we take this 50% on the close, we're looking for the previous day's high. We're looking for that high. But this is what we may just end up with today. And then we start getting a nice little retracement, like a nice little big retracement like this, and start digging into a downward candle would be lovely. But right now, yeah, that previous day's high is in the call, or is in the region. So Geraldston Perez, yes, I agree with you. Right now, that is still in the cards. previous day's high. There's a little tiny fair value up there. See what reacts off that little spot right there. There we go. That's what we're looking for. It's got to close though. Wicks do the damage. Source been checked. I'm gonna try this. Provided it doesn't tear everything off my standing up. We're going up in the world, my friends. We're gonna try standing. My back's really sore this morning. Greg, no. It's been when you talk about this is a fair value gap, we're just what do they call that? It's it's like recapturing the fair value gap. It hasn't broken through it. Just because you have a wick through it, it's not an inversion yet. It's when you have a whole body trade through it, then you come back, and then it becomes an inversion. So that's just, you're just recapturing this fair value gap multiple times over here. That's all. Hasn't been fully filled with a bit body here. Wicks into it. See how the body's just bouncing off the top of it? That's always telling me we're going to go higher until we get a proof of something more significant here. And we haven't had a nice silver bullet entry here after 10 o'clock. So I'd like to see this 10:10 to 10:12 here start to really dig down. Create a fair value gap here that you can enter back into that's still within this range to go short. Otherwise, you're still going higher. I'll still see higher. That's unusual. I don't know why that's happening with you, Erica. So you're trying to short this now, and it's just not, it's rejecting your trade. Well, let's see what happens. No emails, no notification. Yeah, I haven't got anything yet. I will try and short this. We'll find out soon enough. If this drops below here, I'll try a short here and see what we get. This isn't a clean reversal for sure. This is just lingering around up here. We could do another big surge up yet. So we got nothing. So let's have a look over here. Yeah, this has got more upside right now. Took these lows, inversion into it, going higher, rejection block. See that? Took this low. Your body trades through it here. Come back, find some support at it. Mean threshold, rejection block, pay yourself at those. Now we're coming back inside it. If we trade below this here, come back into it, you're looking for a short there. It's like as if you were trying to trade this long and it broke to the downside, then you go, oh, I'm on the wrong side of that. It's going to go down. So that's your, you don't have a clean reversal here. You have an immediate rebalance here. So if you use this one as your, yeah, you're just trying to make something out of something, nothing right now. Wait for something cleaner. Whoa, what happened here? Where are we at here? 15 minutes. Wow. See how you got, watch right here, reversal. The body breaks it right here. You trade all the way back up inside it here. Body catches a nice one, and you trade from like array to like array right here, inside that range. Literally, boom, right inside it. Perfect fill. Then come all the way back up to this array right here, this little tiny guy. You had to be swift to catch that one, boy. That's being patient enough to wait for your premium entry. So you say, all right, if it comes to me, great, I'll take it. Stop loss goes up here, and I'm going to aim for the next like array below me. And you can't just always aim for the lows. Just go from like to like, and if you get more on it, great. Tired this morning. Erica. The setup was presented at 9:30 a.m. with all confirmations. I only saw it pass by. In these cases, should it be taken or just analyzed? Well, those are the ones you kind of look for, Fernando. See, now we still got more upside here. See that? We've broken them. We're still above this. All the bodies are respecting this on the upside. How many people went short there? You're all thinking that was the time to go short. You didn't get confirmation yet. Is it still applicable? Oh, you mean to return back to it? Yeah, absolutely. Russell, I agree. You definitely, if you can return back to that, then it's applicable for sure. Can't wait for this short. They put rejection block on 5 minutes. See, for the 5 minute people, you got to get below here. Like close below this. Come back into this to get shorter. The 1 minute people are looking for that one here to get taken. I would like to see this one get taken and that one close below, come back inside that order block there, and this value gap here. We can come back and tag that candle inside this with a reversal there. Because you don't want to just see this come down, wick into this order block here one more time into the open, and then come back up again. You want to see a body close below all that lot with some intention. Otherwise, we're just building liquidity on both sides of the market here. I'm not sure what you mean there, Fernando. Should it be taken late? Like, should you jump into it late? If you're chasing price, if you don't get your setup, wait. I find this so many times I've kind of done that where you say, like, I think this is your question. Like, this was the perfect entry right here, right? As soon as we were calling this, as it goes through this, we wanted it to go through this, come back, tap it, and it did, and then left. That would be the perfect entry. Now, if you saw that right in here, would you say, now should I continue chasing it when it's already up into the premium of this range here? If you're expecting higher prices, like Michael looks at these up here, oh no, I see it's going up here, and you got in on that late. I don't believe in chasing price because that's not a setup. That's just chasing price, hoping that it's going to go higher. I'd rather be in on a trade where you go, I took that right there because that's what I was looking for. I got my entry, and you catch the run. Otherwise, if you start training your brain to chase after what you think is going to be a nice runner, then you're looking for trouble. I'd wait for a new setup. So a new setup would be something like this. We have this swing low here. See this reversal here. It changes direction again on you right here. We come back, we trade back inside it right here. There to go long. Then you could say, yeah, now I could get in on it and go higher. And now I'm just waiting for the reversal to happen in the opposite direction. So you're still pushing higher. So Russell, if in this case, I wouldn't get in a habit of chasing after price. I've done it many, many times and got my ass handed to me because I chased it right in a premium. You end up buying a premium and then it reverses on you and takes you out. You just go, oh, I thought it was going to go higher. Well, your entrance was down here, you missed it. So if you feel the emotional need to chase after this, document that, put that in your journal, because you're emotionally trading. You're not doing a proper setup. You're not looking for binary trading, ones and zeros. I see this, I enter in here. Keep your emotions down. If you're chasing after that and you keep seeing that running away and you're getting emotionally anxious saying I missed it and you're beating yourself up for that, you're not ready to trade real money. Otherwise, this is going to be an emotional wreck for you. You're just going to destroy yourself. It's, as you can see, we're on a 1 minute chart. Is this going to set up again? Absolutely it is. Don't worry about that. It took off. Get excited about that. Just say, yeah, I like that idea. Oh, not too excited because you don't leave your emotions. Just like, yeah, I love that idea that it took off perfectly there as we were calling it. Gives me confidence that as soon as we start calling the other side here, we might get the same thing happen. Watch right here. I love fountain pens. Look at this thing for fountain pens. And I love writing in italics. I'm writing it down in here now again, Tim. It's in my list now, Tim. Okay. That's the regular trading hours gap. Holy crap. Look at that thing. That was on the 19th. Okay. Those were huge. Do we have a regular trading hours gap right now? I want to see us break out of here. I want to see a distinctive downward candle. Yeah, this is broken through here. It's returning back into here. It's a short there. Now we're going short. But I don't know if it's an overall short. I want to see this get broken on the downside first. So you don't want to see all this waffling around in here. You don't see that, see how it's closed above here now? So if you're shorting this inside a consolidation in a premium, you want to just go to a discount inside this small range here. So come back, fill that. Well, you only got it from here. Oh, wait, your entrance was here. So there's your discount. So if you're inside this range, you just caught yourself a little bit of run here. Not something I'd be interested in at all. You want to see it get out of this consolidation for sure. Got a body trade above this now. Now you're trading below it. So you're in that mess of consolidation again. So just wait. We'll wait. It's Monday. Keep your powder dry. Wait for an opportunity to come in. Don't be impatient. Otherwise, you're just giving your money to the market. And you got to, if you are doing these things, you catch it. You got to trade in the range inside a consolidation. If you're trading inside consolidations, you have to go from premium to discount. Look for the small array below you, a small PD array below you, and aim for that. Don't aim for way down here. You're in a consolidation. So anticipate until you get a displacement candle that you're going to stay inside this consolidation and just reach for highs and for premium and discount ranges. Pull your fib tool right on the range. You'll see how tight everything is in here right now. There's equilibrium right there. So if you trade it up to here, see how this is traded below it. You come back up inside it to a discount array. Then you come back up. Equilibrium is here. Premium array. Down to discount. Discount to premium. Premium. Back to just under discount. Premium. And we're just sitting in the premium of the premium range now. Pull the fib tool in here and 2/4, you'll see. Oh, premium of your discount premium. So there's your premium, discount premium. Fair value gap in the middle of it. Leave it alone. Wait till you see something significant. Let's go back through some of the other ones we were looking at while that is still playing. We're looking for $9.30. Reversal right here, 8.30. There's 9. So when you see this and you want to see that get broken to the upside right here, return into it here, long. So if you can't catch your reversal here and you say, well, you know, I want to see it break this high here, return back to the high and I'll get long. Or if we break this low, I want to see that fair value gap get taken to the upside, come back, find some support at it. But how many of you are going to be patient enough to wait for your setup? Literally wait for it to happen. If it's not there, then don't take it. If it takes off on you, who cares? There's plenty of opportunities coming up. So we wanted oil. We pulled this range this morning in oil. Oh no, what was this? New Zealand dollar. There's your reversal right here. You catch this to go long. This is what we were talking about this morning, is catching this to go long. Make sure it's below the discount range, and it was. That was your long right here. And you pull your 50%. You move to break even. We talked about that this morning. We're just waiting for this to happen this morning, just before this one happened. This was the 15 minutes. So we were looking for it to get back into here to go long. So there's your 50, 62%, 70. You would have tracked that sucker all the way up. So right here would have broke even. Would have come down, shot up into here. And stopped right there, opened. You'd still be sitting right here at 50%. It ran up to 70. You moved to 62. Run up to 75, move to 70. 78. You move to 75. pay yourself at 78, comes back down, would have taken you out right there. So you would have caught all of that run this morning up into a premium array. There's your, right on the edge of it right there. Body breaks below it, come back inside it, goes short. That's a nice one. Okay, so that one worked out. Swing point here. This would have been the silver bullet right here. There's the 9. That's the 10.08. Body breaks below it, comes back up inside it here. For a run back down, pull your range. Discount array. When you get the little inversion, you get above it, you want to see it come back to it. Well, eventually it came back to it here. And now you run back up into the premium array again. So if you get a reversal here, look for a discount array again down in here. And watch that that doesn't take out the high. So you're really between this one and this one here now. Looks like Forex would have been the place to play this morning, other than that first big hit right off the 9:30 open. Nothing here. There's 15-minute. Let's go to a 5-minute. Nothing here. You're still waiting for this to be taken to the upside. Yeah, nothing there. Oil. We were pulling from here. We got here. We did not get back to the level we wanted to. We pulled the foot tool and it started running back up like this into this premium array that we were calling for right there. Hit it perfectly in the middle. It did not come back and give us an opportunity to get long again. Came back to 50% of the range. See that? And then left. So we're looking to go long here at that point. Didn't get it. We didn't sit here long enough to watch it. But had you sat here long enough to watch it, watch this. Wait for it to trade through it a second time. You would have seen it trade through once, twice, 3 times. You wouldn't have been able to get on. You would have looked for this one here. Body breaks above it, comes back. You would have got it right there late. But eventually you would have caught that one right off there for a long. Yeah, that would have been a hard one. That would have been the one to watch this morning. What is our Bitcoin doing? We're looking for this one, traded below it, then went above it right here. So you, let's say you're, again, we were talking about how it didn't take this high out here first. So if you went short on that, here's how you can get beat up, because it did not take that high. You want to see it take a high first before you see this as a swing reversal. Otherwise, it's just an inversion, right? So with the inversion, you want it to hold. And then if it starts to give up and it breaks through on the other side, you go, I'm on the wrong side of this. Then it breaks through, comes back, finds support at it. Then you can continue on the upside and offset any losses you took going short on that. Aiming for your liquidity above the market here, which you would have hit right there. It broke the upside on soybeans. See that through that little into the rejection block. So we'll see how this one closes today. If this closes above, we'll just look for a return to here or back into rebalance this. Like Michael says, if it comes back in here tomorrow, that closes above this tomorrow, comes back in and revisits this tomorrow on a Tuesday, and then blasts off, that'll be a positive sign for a run higher. on soybeans, and you get more up here. And I wanted to see this come up and tap this to go lower. Yeah, baby. Just keep running. Been waiting for this for a long time. Kept loading up my position in this thing. This is good. That's natural gas. Meanwhile, back in NASDAQ, ES, and Dow, we finally cleared all the way through this now, taking the upside. See how the body's closed above here? You come back, find support at this, pushing higher. You want to see these highs get taken out here on the buy side now. And we're back in the mud. Mired down in the mud. Watched it as well because I didn't. Oh, I can watch it. I'll look at this over here. Watched it as well because I didn't typically trade the open. The emotional side sometimes wants to take control. Yeah, totally agree, buddy. Totally agree. And my emotional side wants to take control. That happens. I bet you there's lots of people in here. We're overshooting this. They're trying to get short on this. They were like, okay, it's done. It. We're taking it now. No, you're in a consolidation. You want something really displacement, a significant displacement to the downside. When you got your order block here and a fair value gap, you want to see it clean this out with a full body all the way, like displacement. I'm heading this way now. Break, change direction, break market structure to the downside, come back inside that, then you get excited. Otherwise, our friend Gerald, I think his name was Geraldston Perez is absolutely correct. We're still running for the highs. Yeah, it can be tricky to keep check. I'm struggling to stay out right now. I'm pretty much good for the day, but I want to trade because it's before 11. I need to sit on my hands. Yes. Sit on your hands, Derek. Wait. I'd like to see this run all the way up till 11 o'clock now, and then do a 50 to 62% retracement into that range. If we take out previous day's high at 11 o'clock, and then we start to see a displacement candle, that's my next idea of looking for something significant to bust through. You want to see it break right through here, come back up, revisit your CAM model, people. If this is all consolidation right here, you want to see a displacement, a run up, clear out the highs, and then displace all the way down, come back up, revisit your fair value gap or your consolidation, and then continue on. And then you can draw your swing projections down at 50, 62% of the whole range. And that'll be dandy all the way back through here. It'll be a nice little run. So keep your powder dry, wait and see if something that's clean. Don't chase after price. If it's not there for you, you don't see your setup, don't force a trade. This is where you can get trying to arm wrestle the markets in this kind of environment. You're just going to get beat up. Oh, I love that. That's well said, Russell. Well said. I'm going to share that with everybody on here. That was well said. He said trading is so dynamic. Always have to be constantly monitoring how you feel with profit or loss. So you constantly, not only you're monitoring the charts, you're monitoring how you feel inside. How am I reacting? Because we could be ignoring what's going on in our heads, or you're that adrenaline, that cortisol that you're feeling, and you're looking at this and you're focusing on the charts, but you're not focusing on also that feeling that you're feeling. Is that, am I anxious? Do I want to get in the market? Whoa, whoa, whoa. I should not even be pushing anywhere near that. Hit the trade button, finger on the trade button. You don't even want to be emotionally invested in that. You want to be just looking for your setup and trying to keep your heart rate down, your Hannibal Lecter heart rate down while he's chewing on someone, right? Doesn't break 70 beats. Just keep it low, man. I don't know why I came up with Hannibal Lecter. I just saw Trump's rally the other day. I was watching some of the highlights of it. He was talking about Hannibal Lecter. That was in my head for some reason. But anyway, that's well said, Russell. Kind of monitor not only your charts, but you got to monitor your emotions as well. So cool. Yeah. Yeah, I was thinking about going to get a coffee there, Abs. I think I might go get a coffee so the price can go down. Use the carrot. Oh yes, the carrot. We don't have the carrot. We want the carrot in here. This is where we want it to go. We got to give it a little nibble first. Give it some taster. Regular trading hours gap is this. You go down here, hit regular trading hours, and that's the gap right there. The regular trading hours gap between when Friday opened and Monday. Um, and Monday, there's when the markets turn off, the electronic hours go from um, the previous day's close to today's open. That's the regular trading hours, and the electronic trading hours will continue to trade all the way through, right? But after the market closes, that's the regular trading hours. And there's a gap between there, and it usually comes back to balance that gap. So I'd like to see that run all the way down to 50% of that gap, which would be delicious. Even 25% of that gap would be 62% of the range that we created so far this morning. That's your regular trading hours versus electronic trading hours. Study Michael's stuff. Look at the ICT index and look up regular trading hours and electronic trading hours. And Michael will go into a much better a description of that. The next macro is about to begin. Yeah, I agree. It's close to the highs, man. It's got to take the highs out. And it'd be nice to do that right around 11 o'clock and see a nice silver bullet at 11 o'clock. A nice displacement candle. I'm going to go for a coffee. I'll be right back, and you should get your displacement candle. I'll be right back. There we go. Now we got some action. Look at that. Body breaks below it here. Back up to it right there. Wait for it to break down below here. Bitch. My stop loss was too close. It took me out, or my take profit was too close. I want my stop loss up here. Oh, if your candlesticks are very small, click right here, Jeremy. Click this little spot right here, and that will bring your candles up to relative size. Or you can just roll up the side, click on the scroll button on the side here and just roll it up and down, and that'll make them bigger and drag them. If they're stuck there, just give it a little click like that, and then you can drag the chart. Like if you do this, and then you try to move it up and down, you can't, right? Just give it a little tap on the side there, and then you can move it to whatever you want. You get that more in line with whatever it is you're looking for here. Spy slip has to go above here. That was kind of gross, Hannibal Lecter. Yeah, sorry. I don't know where that came from. Stupid rally he was on. No volatility and Fed speaks wrong. No, I don't want to see it break here on a on a reversal here or here. I guess I could allow for that one, but you don't want to see this one taken out. I like the idea of a cam model too there. If you close a full candle above this, you're coming back into that range there. So you have to ask yourself, do you really want to be involved in that range? Because then you got from here to here again. So that's why I don't want to see a body break above here. That's how I'm going to have to protect that there. Go above here. I'll switch this to instant mode now. Get you some motivation, my friend. Get you some motivation. Not a huge displacement. We don't have a major big displacement candle. You don't want to see these little tiny ones working their way down there, but yes, that is what we're looking for. Silver also close to the fair value gap. Silver's got all the way up into here. So here's where you're stuck with silver. So you've got this low taken here, and we've traded above this imbalance yesterday or last hour on a close. You came back inside it, and now you're running for here inside this one here. Or this higher range trade in here. Look for this to continue up into here, and if it bypasses this, look for a fill on the upside there. That would be the where you're looking at for silver. But right now silver's made its little run right here above here into it for higher inside the range. Gold on the hourly, gold needs to get above that high. Needs to get above here to go higher. And there's really nothing up here other than the session open and that fair value gap up on the upside. And that large up close candle there. I expect to see it kind of react off there and come back down again. That would be contrary to Dixie though, would it not? Dixie sideways. Oil. That's the kind of displacement candle you want to see. Something big like that. Break through here, come back up inside there. Continue on the downside. That's the reversal. That's the reversal this morning. You see that reverse into here? That's a long. This is the short off of here. These would have been more fun to watch and play in, I think. I don't think we're going to get big displacement candles today. Being a bank holiday and such. %50 of this leg. Let me see what 50% of this leg is. You don't want to see that you can get close to that. Darren, can you show us your setup desktop screen? Hello, Sir Josel. I've been sharing my setup with you here, this reversal. You want to make sure it does not close above this 50% one here. You want to stay above here. I don't like to stay in these consolidation's too long, so it's like I don't want to have to weather it all the way back up to here. This is when you get into high resistance moments and you just go back and forth and back and forth. Was there a spread on CME futures? Yeah, the spread is 0.5, 0.25 in TradingView. That's the spread up here. You can see my icon over it. 0.5 to 0.25. That's where it's usually sitting. No, I don't like to lose profits just in this kind of crappy environment, so I'm going to take a give that carrot a little motivation and get down a little lower. Too high resistance, not clean enough. I'm just going to let her sit here. So you've got this swing low here, this potential reversal here. We have not taken that high out there, and you have an inversion happening right here. So I'll wait for something cleaner. Take some money, move it to the sidelines, and wait. And this is where those of you who have gone short on this, if you've taken your short and you've got the better patience than I do, to weather this stuff, and this ends up carrying down, or hoping it continues down for you. But I haven't got any really significant displacement going on there, so I'm gonna sit and wait. And it's Monday. Lots of trades for the day. I do like the idea of this reverse. Came through that, came back up into this order block. Now you don't want to see it break above here. This is kind of like the area you want to look for right now. Comes back up and taps that. Stop loss is here, super tight. Right there. I'm not prepared to be in that kind of rat race, so I do have one live trade on here, but it's a super low risk, super low profit if I do. I'm trying to develop that patience. If you see something, just take it and wait. So stop losses above here. You're welcome, Giselle. Silver, you said? Silver. Let's look at silver. So here's my thoughts on silver. You've got multiple different layers of you've got this one, you've got this little gap right here, you've got here, you can pull it all the way down to there, but think about these areas of sensitivity. Still, you have multiple levels of sensitivity in here. We're expecting it to run back up inside now that we've broken this. So inside, we're looking for this one. That one, we said if it trades through there, look for the upside one to fill. If that one fills in right there, so you can put this one up to right there. That's the whole area you're playing in right now. So that comes up to there, hits it, and then keys off and comes back down. You're looking for this one here, inside that smaller range, from here to here. I don't know, what's that worth for you in silver? I don't trade silver, so I don't know what that would give you. But look for this mean threshold, this order block here. If this one holds, and we close on the hour below here, you have to get above here to find support to push higher. And then you have to get above, obviously, this bigger one here to continue stepping on that to go through the order block, mean threshold here, rejection block, 50% of the wick, so on and so forth, and continue higher. Your session open, keep that as an area of sensitivity. We have low, open, mean threshold. Open is the session open as well. They coincide, so look for those to be your upside objective. If you're in this for a quick little snatch of some money for longs, that's the one you were to key it off of right here. So if you're chasing price now, after here, wait for it to come back into that. I wouldn't even, that's too premium. Get the Derek's discount one here. I like this. look for the range that you're in, and that would be your nice discount to go higher inside silver. Otherwise, those are the key levels I'm looking for upside for silver. Keep that. There. And then also that imbalance down there as well. It's also this right here. I'll make it a different color so it looks a little more. Just go. As well. That's what I got for you on silver. See how it closed above here? Literally came back and just tapped the top of that fair value gap and kept going. Did not even give you an opportunity to come back and take out your trade here. See how the body closes? If you put your stop loss above here, it would have ran out and took your stop loss right away. Now you're trading back into that range. So premium or discount to premium, look up here. This is where my eye goes right now. This is the kind of area you want to see it come up to. Let's watch that right now. Now, if we get something off of this order block here, we get a reaction off of that. I'd like to see a fair value gap stay open right here. Now we've cleared these highs out. You look for these little fair value gaps here. Watch for highs to get taken, fair value gaps. Nice sharp displacement candle down below that. Now we're not inside this range. So you've got one here, one here. Look for your premium and discount inside that whole range from there to there. 50%. It's just right smack in the middle of this fair value gap. See that? So you could get on the other side of this. Just coming back to tap an old high to push higher. Look for, again, the key level up here first. And now if we blast through this and come back, find support at it, I'm much more likely to run the highs than go lower. This is why you start getting those moments where you go, I don't like this consolidation crap. So we got to weather all the upside of that, get a little bit of profit below this. You watch this here, you go, as soon as you see that low get taken out, you say, if that fair value gets broken to the upside, along with this one as well, then we're definitely on the wrong side. So if I'm on this here between this one and that one, if I'm running and I close above that, which you did right there, and it fully ran through that one as well, because you're in such a tight consolidation. There's the premium, there's the discount. You went from discount right through the close through it, close right through the premium, and then it said, if your stop loss is here, I'm going to give you one opportunity to get out and change your direction. Come back, tap, and then go. Even there, I don't think it's a perfect tap of that fair value yet there. Because this one here actually goes up to there. That's in the, I'm gonna have to stick with this one over here now. See on that little range there, you got discount premium ripped all the way through both of them. Didn't even come back and give you an opportunity. Did it close above? No, the body closed above it here, came back, tapped it once right there, and then left. I didn't see that till I just saw it now. That's the candle that initiates the run down. It's the fair value gap. If you don't get the fair value gap, look for the candle that supports it, that initiates the run. You got to break that for the upside, come back, tap it, and go. And we're all looking for that 11 o'clock reversal back into the 50 to 60% of the run. And if it's not, and we're already going into the middle of the hour here, this could be the run up and then the book down. So here's our order block. We just tapped it here. See what kind of reaction you get off of here. We have an immediate rebalance back to the old highs. I don't think they want to leave that untouched yet. We'll just see how that goes. Okay. Taking it down. It's Darren's aerobics class. We're taking it down, people. Working down. Oh, Lord. Okay. Chandra says, I'm seeing bullish in NQ. Yep, I agree with you. You're bullish right now. All the time you're above here, you're bullish back into here. I'm much more bullish if we get above here. Get through the mean threshold of that candle, close above this key level. Yeah, then I'm even more bullish, but I'm with you, Chandra. Gotta go, D. Thanks for everything. Thanks, Abs. Appreciate it, man. Greg, I thought once the candle body has passed the fair value gap or blocks, it doesn't. It blocks, it doesn't could, but I don't understand you, Craig. I thought once the candle body has passed the fair value gap or blocks, it doesn't could, but you seem to be still looking back at levels that have already had candles pass through them in the past. Yes, we cut through candles. I use ones that are inside the larger range still too. I use all the ones that are still inside these larger ranges. If you're inside a larger range, I still use these levels because they are important. Watch. See how this one here, I'm going to pull it through. Watch how important it is. See, you still come back and find support at it. There's a little guy right here. See how that one doesn't touch the bottom of that one? But when you get back into here, I will tend to get out of the consolidation as soon as I can, and I'll start pulling ones that are more significant, like inside this range here, there. And then I look in the range and I go, okay, that's my equilibrium one, close to the equilibrium. And I go, this one here is not so important to me right now because I'm looking at this one over here now, and I cut through candles. Like Michael says, I cut through candles all the time. I just like to play inside the larger range that I'm in, and if I start cutting through this one, then I start to go back to this one, and I start looking for these levels again as levels that are important for me. So there's that key level we were reaching for, and we've hit it. So there. So yes, you're right, Craig. There's you look for this as the first initial level of sensitivity. This is why retail really hates the idea that once that candle's traded through, you ignore it. It's no good anymore, and that's bullshit. It totally is an area of sensitivity. We've already traded through that. Does that provide a level of sensitivity? Do you see it hitting that key level right there? The bodies respect it and stop on it. Well, there's candles and wicks there. How do you know? Yeah, it may continue through, which is what we want. We want to see that, and then you want to see that provide a level of support through the mean threshold of this candle. So yeah, unfortunately, you got to keep your eye on all those levels. So as Chandra is saying, she wants to go long. Whether you're basing that on this right here, 5-minute candle, there's a fair value gap right there. What level are you trading on? Stick with the level you're trading on. Look for the fair value gaps. If you want to be more patient, you're saying, look, I don't want to be in the rat race of the 1-minute chart. That's fine. You can stay inside a 5-minute chart or a 15-minute chart. Look for this. This is your key level right here. The body is now traded above that. And you want to see this mean threshold hold. And then the reverse get back down into here. But if you see it stop in here somewhere and then leave again, you go, why did it stop in there? You go down to the one minute chart, you'll find there's a whole bunch of key levels in there that it could have just hit, found support and running for your equilibrium. So on your 5-minute chart, you want to start looking for these key levels here. So you're going to wait all this time, 20 minutes, an hour, 2 hours for it to come back into here, if it takes that long. Maybe 10, 15 minutes to come back in here, 2 more candles to come back, retrace back into here to go long, provided your long doesn't, your objective doesn't get taken first. If it does, be careful that as soon, keep your stop loss, because you got another one sitting right here below you. So if you start to take that high out, you start to look for these fair value gaps on the 5-minute chart that get broken on the downside. Don't be looking to go long here. You want to be getting short to this area here, because then the decision is, do I continue going long again, or do I go short even further and I break through that on the downside and then take this side out here? So that's why I look for these inversions as key levels for me, and ranges that I'm in. And I will use fair value gaps from way back there if I have to. And if you're part of our Telegram channel, you'll know that there's other invisible fair value gaps that are key levels of interest. The invisible fair value gap. And I won't be discussing them here because they're not my idea. I think they might be a Michael idea, but Michael's never called them invisible fair value gaps. Let's get back to the 1 minute. So now you want to see this area provide, see how we've closed above it? That tells me we're going longer. If we trade below it, then we're saying now you're going to go back inside a smaller range that you're in. So what's down here with this candle has been bought on the buy side, nothing really on the sell side. So look for a return back to this order block. If we eat through that and we start to get back into this range, you're starting to look for this one, and this one. These are discount arrays. And you look for the one that initiated the run in the first place, which is over here. So you look for, we have to get below this, then start trading back into this range. So you start saying, okay, we're in a consolidation now. Remember the mean threshold of this candle? It's a level of sensitivity. It's a breaker. This is a breaker right here. And if it, breakers provide a level of strength. They're a senior array, as I call them, senior arrays. Like they're strong. They're not like a mitigation block, which is weaker. So it's a minor candle. It's a promotion candle. You get promoted from a basic order block to a mitigation block, and then you get a senior, you get the royal, the popedom, you get the blessing, and you get moved right up to senior array, the queen, the bishop, the rook. When you get moved to a chess piece that's more serious or stronger, that's a bigger piece right there. And if you take that out to the upside, then you're much stronger. So I look at breakers as a key level of support for me. So if you eat through the mean threshold, see the fact that you get all three of them taken in one candle, then your ass is next. If one candle takes out 3 arrays at one time, your butt's next. If your stop loss is sitting up there, you're about to get your ass handed to you. So if you're short right there and it traded above you, you have multiple attempts to get out of that before it runs higher. And if it's consolidating like this, I wouldn't be in that. I want to see it come up, hit that with a wick, no bodies go through it, no candle, no wicks go through that, just hit it and blam, like take right off. You do not want to see a body even remotely. You don't even want to see it hold there. You want to see a wick pop down or away from it and then start escalating. And you'll see entries like that where you see, like here, if this was the one that you were looking for to catch long again, it broke that high, you come back and it literally 1, 2, 3 hits it, whips out of it, and you came down tag 1, 2 areas, you didn't get your third, and it left. It didn't linger around here. It's not doing this pokey poke thing, jump running up and down here, consolidation, high resistance crap. See how you get this, provides a level of strength. So now that key level is now right here, which is that consequent or the mean threshold of that candle. Wicks do the damage back to the order block. Also the mean threshold of an hourly order block. Or is that the top of the high? Sometimes I mark those things. Oh, it's the 50% mark, the wick. See, we've taken out that high on the hourly. That's 50% of the wick. So I want to see that really get down, dig down into here now. Give us a nice, decent displacement through this and this. We come back, revisit this here, and then continue short inside this range back to here again. So the next key level we're looking for is down in here. Now this is one of those price action studies. You shouldn't be mucking around in this on a Monday, on a bank holiday. Sorry, Craig, I'm way behind in my messages here. Craig, what is that yellow box representing? Which one? All these yellow boxes represent. Sorry, Craig, I'm a little behind in my messages here. These are levels inside here. So I look at this as, if I pull my fib tool from here, after a while, I just kind of look at these with my eyes and I don't bother dropping my fib tool in. But I look at that as that is the equilibrium consolidation. There's the premium and discount ones inside the range. And I go, okay, if that's the premium, we're running up to a premium. Now, if we get through this consolidation in the 50% range, like here's 50%, we just pop into here and then run back up again. That's fine. It's acceptable. It's the range. It's the one I'm expecting price to get drawn to. And it just tapped it right there. So here I want to see it drive through it and get down to a discount range. And if I start looking at my discount, I look down in here and here. So this is the one that initiates the run up. So I'd be looking for overall. I'll run down into this one here. And that's the 50% of the leg. That's cam model 3 right there. Cam model 3 is probably right about here somewhere. Cam model 2 is in here somewhere, right about the 50% of that. That's cam model 2. Cam model 3 is probably, let me have a look here. Yeah, cam model 3 is off this breaker right here. Swing down, take out these highs. So if it comes back to this breaker, so you're trading from breaker to breaker. Then, or these two to this one here. If you look at this one overall, then you could say we're trading from like to like, array to array, breaker to breaker, inside a range. So there you go. Key level. Bing. Now, you don't have to be trading this. I just want you to see the levels so that you can stay on the horse, right? Chandra does. Nice. Call on the NASDAQ high. What was your confirmation? 5-minute fair value gap being respected. Asia levels taken, buy side and sell side. NQ. YM breached last week's high. ES is not. 5-minute on NQ is interesting. Hi, sir. Good morning, Amadeus. I think I saw that on another YouTube channel about fair value gap. That's why I thought they don't count one once it's filled. Oh, somebody else might put that. That might be a retail way of thinking about it, but I don't look at them that way. And sorry, that's confusing for you. If you've got one live streamer telling you they don't matter anymore and another one telling you they do, all I can say is the ones who say they don't matter anymore, get them to prove they don't matter anymore, because I'm proving that they do. I just proved to you from here to here, that was a key level. And then I proved to you from there to here. And this has all been traded through before. And I put this in here long before it hit it. That those are important key levels. So you can take, I'm not discounting what, because I don't understand the context in which they're telling you they don't matter anymore. Because some of these don't matter to me anymore either. I'm looking at more recent ones. So I don't understand the context, and I don't want to run anybody else down there. When you're doing it live, man, I got a lot of respect for you if you're doing trading live, because you're under the scrutiny of many eyes and you have to prove your concepts out. And if you're wrong, everybody's going to see you're wrong. So you got to prove it out. So if you say why, I'll tell you why. Otherwise, I'm just marking spots, right? So hopefully you understand why I look at those levels inside the ranges that they are in, because then I look for premium and discount. I'm always pulling a fib tool. I'm always looking for premium and discounts, and I'm always looking for where price action is relative to the small range that it's in, and what PD arrays are sitting inside that range that we're in, and what will be a likely PD array to reach for, what would be a draw on liquidity inside that range. When does, if I were in a trade, where would it fail for me? So you're constantly looking for, if I was in this trade, where would it fail for me on the downside? So inside this larger range here, I would say if I wanted to go long here, if it took this out on a close, that little imbalance, that rebalance there, if that took that out on a close, I'd be on the wrong side of this, and we wouldn't be going higher. So like Chandra was saying, we're going higher. I'm like, yeah, I'm all for you until we see this. If we break this on the downside, I'm not anymore. I'm bearish inside a range. Yeah, you could be bullish overall later, but right now inside this range, I'm not. So as soon as it took that out right there on the downside, along with this close, I go, that now is bearish. You get one opportunity to get out of that right there to continue going bearish inside this range. So you're looking for inside the range. What's sitting inside the range that is the drawn liquidity for me? The fair value gaps below you, the breaker, which overlaps breaker inside a fair value gap. Delicious. Look for a place to return to. So if we hit this right now, what I would like to see is now this go from here all the way back up to the next key level, which is right back up in here. Now we're going to start shrinking our arrays. So I want to see this get back up on top of here, break that piece right there on the upside, find some support at it, and start pushing inside this range here. What's the upside? Here. That's your breaker right there. Took out these lows here. Continued. Did not take an overall run down there, so I'm looking for this level here. Now, if this closes below here, now I'm really bearish. I start to go super bearish now, because now I'm through here. That is the last key level, and it's been worked. The mean threshold of that candle has been worked so much. I'd like to see a big displacement candle get right through that, come back, find some support at it, and start running through, or at least support at this breaker here, because that becomes a senior array, right? It's a senior array, so you've gone from like to like, senior array. if you look at this one here, we've come all the way down to the mean threshold of that one. We came all the way up to the mean threshold. So you're looking at mean threshold to mean threshold of these candles. You add them all together, you'll find that the mean threshold, fuck it, let's do it. Let's do it. Take the body to body right there. Look at that, 50%. Wicks through, bodies are respecting above it. That's inside. You add all those together, support. If it eats through it, now that's an important thing now, right? That's what I want to look for. So constantly ask yourself, where do I think price is going to go next? If we're in this consolidation now, we're just going to baff around inside here. The next upside objective would be here. Now, in order to get that, I have to be above here to get back in the range. If not, I'm still bearish. All the time I'm below this guy here. And if I can get below that guy there, then I'm really bearish. Because remember, this is the one we're looking for. If you trade back, this is the swing, right? Swing reversal, taking out lows. We got the swing reversal. Body breaks above it. You don't get a chance to get in on it. So you look for the candle that initiates the run. As soon as we get a body trade above that, right there, you look for a return to it. Then you get long inside the range. You're looking to get back inside this range here. You hit it. Now you look for a reversal. There's your reversal back into this range, or you look for continuation to the upside. Here we were looking for more upside. We didn't get it because we were like, okay, too much waffling around here. I was talking about this saying we wanted it cleaner, right? So the mean threshold, if it holds, we were talking about how that holds price, and it did. Finally broke down. Body breaks below here. Come back, getting short right there inside the range. Now we're looking for a run back up inside here because this breaker here is holding price right now. So I want to see it get above here, get above that level again to trade back up inside that range. Does that make sense? I hope it made sense. I can ramble a lot. Silver's heading down now. So silver did what we were expecting it to do. Did it? Did it? Did it? Did it do what we were expecting it to do? Mean threshold right there. See? You got that guy. And then we wanted to see it reach above here. If it takes this out, then we're looking for higher array. So that candle is the breaker that takes out this low. It's a senior array. It's what we've just been talking about. You want to see it hold price. But if it doesn't, well, the next one you have above you is that little gap in price right above you here. And it still may run there. So if you're going short on this, you better be looking for it. So, okay, so let's break this down now. If that was the key level you're looking for, the middle of this order block, go down to the lower time frames now and see if you can see a setup in there. So let's go down to the 1 minute chart. Eek. I can't see anything in here. That is a shit show. You can't get anything off of that. So we'll go to a 5 minute chart. Let's try and smooth it out a little bit more here. 15 minute chart. See, that's why there's not enough. We keep gapping up like this. I guess there's not enough volume, as it were, in silver. There's a lot of gaps, and I couldn't trade this on a 1 minute chart, obviously, and a 15 minute chart I couldn't. 1 hour chart, you have to stick with that. So that's the only one that looks relatively smooth. What would be a 30 minute chart? Let's try a 30 minute chart. Yeah, it's cleaning up a bit more now. So for me, you'd have to see yeah, I want to see this candle here. And this is not super accurate right now because there's so many gaps in here. I can see this one here, how the body is traded right up to it. Mean threshold holds it on the 30 minute. Beautiful, perfect. Close below, so we'll close right on that. And now we've exited off of it. So your inversion is holding right now for a short, but what are we coming back to? This discount array right here, and there's another discount. Is that really discount? Standby. I think the bottom one's the discount one. Yeah, this one's the one you want. So if this holds here, so your stop loss from there, if you're trading that short from there, then you better be pulling your fib tool on this sucker and running it out. Well, actually, you'd be pulling your fib from here. As soon as you get 50%, start pulling some out, or err on the side of caution. Come on that one. Take 50%, move to break even, and then 62. Well, 50% is right there. It's back to your, wouldn't be worth that trade. But keep an eye on it, watch it, study it, and see how you like silver. But yeah, you'd have to get into like a 45-minute one. Let's have a look at a 45-minute trade. Yeah, see, for 45 minutes, that candle there, we have not taken out an old high. So this one here tells me on a 45-minute level, we have just returned. See how this is all even here. This is even. We have a gap here that doesn't count from there to there. That's the 45-minute one. We traded above it right here. You traded back into it here. Now you're looking to go higher up into this one here. So from this to this is the range you're in. That might even be a discount right there. Stand by. Oops. It's not the one I want. That's the one I want. So you didn't even come back into 50% of that range. You just came back into it. Still a premium. And the discount would have been below the consequent encroachment of this fair value gap. So it should have been down into here to go long on that. That would have been the wiser one to go long on that. But if you're going short on that, I would say not a good choice. Wait to go long, or you're in a long situation on a 45-minute chart up to here. But then you have to wait 45 minutes before you see where this candle sets. So right now, I wouldn't touch this on a 45-minute chart at least. See on the 1 hour? You haven't even come back into here, equilibrium, to come back and get this one. So typically you'd say, all right, if I miss the fair value gap, I look for the candle that initiates the run, which is this guy. I'd have to get above that one, come back, find support at that to push higher. And then all of a sudden, well, you're already in the premium range already anyway. So this should have been way down here so you can get up in a premium. It's already in a premium. To reach a premium, there's like a small area there. So I wouldn't touch this. It's not a clean entry on a 1 hour, let alone a 1 minute. I couldn't even tell you what the hell 1 minute was doing. How do you even look at that and say, I know what I'm doing? No idea. Here's the reversal. See right here? Body breaks above it, right there. We took out all these lows. You broke above it. Now you're looking for this return into here. That candle to close. Then you come back up into that key level here. We haven't taken this low out yet. You're still inside this range. So the next key level for you is about up here. So watch for right here. So far we just opened and closed right on that. See how we draw all the way through all this lot? This has been mashed around in here so much. Why is this important still? Look at it. Is that a key level or what? And that's not even in, well, it's also, no, it's not even at the inside that fair value gap there. It's slightly below this guy. So is it still a key level after mashing through it multiple times? Dang right it is. It's important. Yeah. Sorry, let me get back to my questions here. ES failed to go weaker. What do you think about NQ reaching 18,700? What do I think about it reaching that? Who's that asking that? That is Ruby. Okay, Ruby, this is the question you want to ask yourself right now. If you wanted this to go to 18,700 down here, right? And this is why you'll see me flipping and flopping, not giving you a straightforward answer. You have to go, if I was bearish, if I was bullish, where would it fail for me? Where does price fail for me? And I look for lower prices. Now you're looking down here to 18,700, not even on my radar right now. Not even on my radar, because I'm looking bullish right now. I'm not looking bearish. I'm looking bullish, and I'm inside this range. So I'm not looking at any higher time frame charts because I'm stuck in a range on a 1 minute chart. So where are you on a 1 hour chart? You're flat, right? You're not doing anything on a 1 hour chart. So trying to get all your ranges, all your levels that you're reaching for on 1 hour and daily charts, they're not going to do you any good right now in a one where we are right now in price action. None of that stuff matters. And it's all guessing right now. All I can say is if you're bullish on a daily, I'd say, yep, I'm bullish with you. And then I'd be like, nope, I'm bearish. Now, like with Chandra, we were bullish until we weren't. So we're just trying to stay on. I'm just trying to teach you how to stay on price action. Stay in price action so that when it's trading back against you here now, you go, why is it going in that direction? Well, because it took out some lows. It created this reversal. We're looking for it to return back into this order block, and it did right here, right back into the order block, and now we're looking for it to go higher. So if I was looking for this, I would not want to see that get taken to the upside. Otherwise, I go, I'm back in this range now. That is not even on my radar right now. Right now, this is on my radar. That old high, that stuff's more on my radar now than anything down here. Now, in order to get down there, I've got to come back up, find support maybe at a 72%, 62% of this smaller range, and then see it quickly reject off of that and start really driving for these lows here, right? So you see how it's come back into that close to the equilibrium. That's probably a premium part of that range now. If I look at just eyeballing it, it's probably premium. Yeah. So there's 50%. We just ran above it, right into that equilibrium type candle of the whole range here. So it just came up in there, found some support. Good. So now you want to see this create a fair value gap here. And if it doesn't, then you look at this order block. If it runs through the order block, runs through this guy, it needs to, in order for me to look at 17 to be looking down here now, I want to see this break to the downside and this break to the downside. I want to see a body close below here and here to get me in sync with a lower run. Otherwise, I'm still bullish back into this range, and I'm looking for that key level up there again. And that will be all the way inside here. That key level starts here and ends right there. I hope that helps. And you just watch price action now, and that's where I go. If I was in this trade, where would I go? What am I reaching for? What do I want to trade? Is this a tradable thing? Am I going to get enough benefit if I put my stop loss down here and I'm reaching for up there? Is that any benefit for me to run in there? No. So that's just a consolidation. So now you want to see this climb up on top of this, get some support on here, and continue pushing into the premium portion of that range. Hopefully that answers your question there, Ruby. Why key shaded area is key level? Because it's a premium in a premium range. I think I just explained that, answered that question. It's in the premium portion of this larger range here, and it's the like array to like array, which we've done from over here. I said it was going to run from, we had this like array here that we entered in on short. Then you got another like array here. So now you go, here's the range I'm in. So when I break that candle's high, and we talked about this when it was happening, when that candle's high gets broken, I'm looking for a run back up into this higher range. If we get a body break above it, body breaks above it, it takes out this one as well, comes back. We're looking for support here. If not, look at the one that initiates the run down. That's this candle. Body breaks above it, hits it. That becomes the key level. We hit it. Mean threshold, senior candle. We talked about this. It was a level of support we're expecting. Mean threshold, line in the sand. It holds. Then you go, if we start breaking below this candle and that candle there, we talked about that when it happened. It did. Broke back into it perfectly. Now we're going short inside this range. So the key level moved from there down to here. The candle that initiates the run up, it came back, more than hit it, went through it. And we go, okay, we're potentially going short unless we trade back above here again, which you do. You go, great. If it does, then there's our reversal. And we talked about all that. Coming back to here, it hit it. Now there's the key level, hit it, bang. Right? So hopefully that answers your questions. Are we more likely to see 18,700 or new highs? We are more likely now to see new highs. Based on everything I've discussed with you. From here, we have stayed on the horse, both sides of this, and I've given you all the logical levels, and I've given you the turn points on a 1 minute by minute candle. That's why we say stay on the horse. How do you stay in price action? And if you guys are overshooting it, not that I'm not looking at anything wrong with your stuff, Ruby, because I have no idea what your setup is. But if you're looking at 700, you have to ask yourself, am I aiming for 700? Is 700 on my agenda right now? It's not. If you're in price action right now, all the numbers that you have on all your other higher time frames, unless you have a higher time frame objective right now for as something to break out of here, I would say that they don't matter to me right now. Until I get out of this range here, those higher time frame objectives aren't on my radar right now. Key levels. Remember I said it would run from here to here? And where did it run? From there to there. Bottom of that thing. Okay. So now you get the key levels. Why that's important. When you're in a consolidation, if you can look at the consolidation that you're in and look for the premium array that's up here and the discount array that's down here, and you start to go like to like, look where price action is. And if you don't know these things, study Michael's material on arrays, the PD array matrix. Study it. That's all you see me using is the premium discount PD array matrix, what I look at. And there may be some discrepancies between what I see and what you see, or what Michael defines as a breaker, but they seem to work for me in terms of when I assign a breaker and when I give it the value, because I will look at a breaker and I'll say that's a strong breaker versus a weaker breaker, just because, yes, it did take the low out more with a wick than a body. I like to see bodies take out lows. Then I go, now I know that's a distinctive. It's not just a target hunt, like a stop run. Like a wick is usually a stop run hunt. And then the body, when a body breaks it, now you go, now you look at that level that it broke, look for a key level in there, like a breaker or a fair value gap or an inversion. And that's the level you want to get some support off of. So don't trade these. I know I've given you like bomber type of entries and exits here, but again, I don't want you to trade them. I just want you to study price action inside these ranges here. And hopefully you'll understand when you guys do your trade setups that you use the higher time frames now as objectives in time and price to get where you want to go. I don't even have my my minute thing on here, do I? My indicator. Where's my indicator? It must be at a new hour. Yeah. So now we're coming into 12 o'clock. So now I take this guy here and I go burp, and I move it over to here. And I go. I look at this range I'm in right here and I start to use, I might reach back into that one if it starts going. So you kind of look at these and these inside the range that you're in right now because you're overlapping. These will start to phase out. I'm not so interested in them anymore, though they do provide a level of support. Like if I draw that guy there all the way across, you'll see that it still provides a level of support. But I have overlapping ones that still provide, that give me these key levels. So I'm not too worried about that level because it is supported inside this one here is your mean threshold. So they're all, I can peel away from those now and start using other ones that are overlapping these that are still supporting price inside the range. And that's something you'll develop over time, what you like. There's no hard and fast rule that I know of that Michael said when to ignore these old arrays again. I know he likes to use the look back periods, and he'll look at day of the week opens and weekly opens, new week opening gaps, daily opening gaps. Those are important. He'll mark those on the chart, but we're in a 1 minute chart here, right? So which one do you use? So we haven't seen this high get taken here, but this will become an inversion. If we can get below it, come back up, find support at it, look at that discount array, premium array inside the range. So now this becomes a key level down here. If we break this low, if we don't break the low, that is not a key level. I want to see that low get taken on a close. If not, it finds support at it, comes back up. I want to see it get through it on this side here to go higher, to take out this and get through that mean threshold one more time and clear out the liquidity that's sitting here. Rejection block 50%, lots of arrays. So if we're just playing around in lunch hour now, boom, 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 just going smaller, smaller till it breaks out, pops down until it cleans out all the liquidity above and below the market that it's created since 10 o'clock. Because this is just a small, tight range here. So there's a lot of liquidity here. So my key area shaded in its key level, but talked about that. Dave, we like the range squeeze. LOL. Yeah, it's like a squeeze, like a compression range. I love it. It's just like Michael calls it like a coiled spring. It just coils, gets tighter and tighter, and then bam, it has to explode somewhere. And that'll be like the lunch hour at 1 o'clock, right? When you hit around 11:10, 11:12, 11:16, somewhere around there. Look for 11:12 to 11:18. Look in there for a fair value gap to form. Craig, thanks. Welcome to Futures. Haha. Okay, back to NQ, please. About to break. Maybe it's testing. I mean, I took the reversal long. Dave took the reversal. I don't know how long ago that question came up, but anyway. I took the reversal long. So, Dave, you took this. I hope you took it back to the premium array and then got out, which I'm sure you would because you're pretty freaking steely-eyed now. You're learning this stuff so well. I love watching. So, and I love the fact that you're putting like 25 handles on this. You go, I don't care. It's a demo account, but I'm trading my setup. I'm not trading. I don't care about money. I just trade the setup. And it's hilarious because you look at your trades and it's like, oh, he's got $8,000 on this trade. I don't care about the price he says. I just want my setup. I remember that key level starts here to here. I'll pull this one over here like that. Now we're in a discount. So 62%, 70%, pull your fib tool. Don't forget, just because I said that's a key level doesn't mean to say it has to go there. You should always be pulling your fib tool. If you're entered in onto that short and you went short off of there, you're going for 50% break even. 62%, it hit it perfectly. You move to 50%, it comes back, takes you out. If it comes back in there one more time and loads you on again, you load on again, hits 50%, you move to break even. 62%, you pay yourself. This is buffering. This is how you buffer off of one end to the other end. So inside that small range there. If you can buffer it, that's another higher level of practicing. Not actually trading it inside this stuff. Just play, put paper out there and taunt this price action. Dare it to try and throw you off. Say, it's got to do this. If it doesn't, I'm playing. I'm just going to keep staying on this horse, and it's spinning right now. It's bucking up and down, trying to shake you off in the middle of a range. Equilibrium. Is it going to throw you off? You say, well, it'll throw me off if it clears above this old high here, because then it'll go, I'll be off back on the horse again to go long. Because this has just been an optimum trade entry reversal. And if Dave was on that short now, he'd be like, okay, I've paid myself here and here. So if this reverses and goes back long on me, if this is the optimum trend entry drill, then I got to benefit right there to there. I made money in that one candle inside this because I was going short to a discount inside that range. And I took it, made some money, and you got to be disciplined enough to be happy with that. If you don't, and it comes back and takes you out, don't blame me because you're not working your arrays properly. And you said, well, you said it was coming to the key level. I'm said it's trading inside here. That is the key level I'm looking for. But doesn't mean to say that if you weren't in that trade, you wouldn't be paying yourself along the way because you're consolidating. So in a consolidation, you pay yourself at discounts, man. Don't expect these major bust outs until you see a big displacement candle and then key off of that. So you would have buffered there once, paid yourself, buffered again, paid yourself again. You're at break even right now, or you're at 50%. You're pretty much paid yourself twice in both of those. Still looking for the key level here and here. So now you start looking over here and you go, ooh, that 18.7 rubies. Ruby Tuesday. Come on, Ruby. Ruby, we want to get rubies 18,700. Well, right now you're saying, I want rubies 18,700. Well, in order to get there, we got to get through this and through this on the downside close, break that candle. So we have change in direction, break in market structure, and then we're looking for the next level, the next level, the next level, and then aiming for rubies 18.7. He dipped all the way down into here. What's down in here? On the larger range, there's that discount there. I can't let that one go yet. We're still inside the bigger range here. So this is the discount inside this smaller range, but it overlaps this guy right here as well. So you could take it right up to here, right there. I'll put the key level, sorry, right in there. So from here to here is where I'm looking, because I'm taking that guy and that guy inside that range, inside this range. They're overlapping. So take the higher one for the discount range. So now ask yourself, if this was just the reversal that's going on, I want to see it get above equilibrium here, body on top. There's nothing else above you other than this right here. I want to see it get through that, through this, and then obviously through the mean threshold above that. You've got this little breaker here as well, mean threshold. So look at there's multiple levels of sensitivity here. This is where it gets really fun, because now you're going to say, how do you stay on the horse inside smaller ranges that are compressing like a giant spring? So there's your upside candle right there. You'll see the bottom of it. Just tap it right there. And it's a number 18 wick candle, 17. Or 16, 17, 18. 16 sets the low, 18. So 19 is usually a reversal candle. And then 22 or 21. So if 19 pushes through, look for 20, 21 to set a high. Or set a high around a mid key levels. So here's your 19 reversal. And this is just something I've been studying over a few years, is the actual minute candle. That's why you see me loving the 1 minute chart. Whoa. I mean, I took the reversal long. Don't forget the like button, guys. Yeah, if you like what we're doing here, hit the like button. If you want to stick around and kind of watch what we do every day, this is where you really find out whether or not what we're saying is true or not. When you see these kind of consolidated markets and high resistance things, and we can still pull out not actual trades, but actual entry and exit points that are key levels for us. If you can't see that we're sitting on an algorithm here and we're running from array to array based on what Michael's taught us, I've got nothing for you. I can't show you any more accuracy than what you're seeing right here on a 1 minute chart. And most people will look at that and say there's randomness in there. That's all chaotic. There's no structure to any of that. And I've talked you through hours of staying on this chart, calling the points in which we're expecting it to go to, and we're staying on price action through the whole thing. So if you like it, subscribe, pop in, stick around. You're happy. We're happy to have you. And if you want to stick around after the hours, you got guys like Dave and Fernando, Tommy. You got the big guy himself. You got Derek, Abs, Lambo, Erica. You got some key people that love playing in the charts. Dave studies these things inside and out. He's been really working this reversal pattern, and the reversal pattern and inversions, fair value gaps, key turning points. They will really tell you where price is going based on inversion points. Now, if you've got an entry on a higher time frame, look for this kind of stuff on a higher time frame. Because when you see this on a daily chart and you see it hitting that key level, and you look for this entry on your daily chart, you're saying this candle right, when you see me put these things on here, that's the hourly order blocks I'm after. And if I hit those key levels, you look for reversals, and then you're going to go short, go long, whatever you're going to do based off that. And then you have to go back every hour and refresh them, and I haven't. So I've got to go back, and here we'll refresh this hourly chart. So that one's gone now. You got to look for this wick here. And my charts all have different meanings. Bold lines, jagged lines, and dotted lines. And the way I do it is like a visual as well. This is like a key level. This is the next strongest. It starts to, imagine that line starting to fracture where it starts to get weaker. So for me, it's strong at that point, and it fractures, and you get this one, and then it really turns into powder, when it gets up here. And if you get through that, that's the line in the sand, literally a line in the sand, dot, 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 dot. If it breaks that line in the sand, I know I've got upside. That's how I visually do it myself. You do it whatever way you like. So again, these are still key levels. A lot of this, look at this wicks, just trying to get up there. We broke the high and it's trying to get up and make a new high. And if it doesn't, this is a good sign of, while we've ran the highs out here, what is the daily chart done? We've taken out the high on the daily chart. Beautiful. Now you're looking for, what have we got down in here? Holy guacamole. Look at this. One hour fair value gap. Not an inversion, it's a fair value gap. Key level. These become important levels now, because on an hourly chart, if you want to see lows, these lows get taken, you want to see this reversal get taken right there on a close. And the mean threshold of this candle, which is right here, and this one is right here. Oh no, that one's, sorry, it goes like this. There, and then this one goes right here. And these ones I have to put them on the sidelines for now because there's no upside candle other than the wicks. I guess we could do the rejection block. So I'm looking for old high, open, rejection block in a breaker. That's an important breaker right there. Down close candle. Takes out this high. Takes out that high. That's a senior array. It's a senior level candle now. Anyway, that's my levels. Got lots of we're still got our key level we're looking for down here. It ran all the way back up into, we talked about this, was the rejection block, or sorry, the consequent encroachment. Sorry, mean threshold. My mouth will just say a word and I'll have to chase after it. So don't listen to the first one. Wait for about the third or fourth one. That is the mean threshold of that candle right there. It hits, respects it, bangs off of it, and now we want to get through this. See how we traded to the upside? We came back, found some support all the way back inside it to a perfect entry right there off that candle. You see that? Look in your charts and look at this candle right here. Body breaks this here, upside, come back all the way inside it, hit it, come back up to a higher range. Inside this range right here, it's in a discount. Inside that small range, it went to a premium, then reversed, then came back. Now you got, see how we've bigger, smaller, smaller, smaller. Now he's got to extend it. You've got to get past here. So now you've gone from this array all the way back to this guy here. From there to there. We hit it there. We run all the way back to it right here. Bang, come back up. Now you've really got this candle here and this candle here inside a new range. If we want to extend past here again, I've got to get back down into that discount area of this. Otherwise, I'm just in premium of the premium, the discount of the premium of the premium, and back inside that range. So you really got to watch your ranges and ask yourself, where's price right now? What logical place do I see it going through? So if it's broke through here right now, see how the mean threshold's no longer holding it. It wicked up one more time to try and get something inside that range. Watch this. If I pull this here, and I just pull my fib tool from that candle's low to that candle's high, it did not even reach up in there. That was it. An attempt to try and get back up there, didn't, failed. And now we're looking for our discount array down here. So we've gone from like to like, like to like, like to like array up here inside this guy, all the way down to the like array here. It's going to take us some time to get down there, but we're getting down there. We haven't broken that high there, so we haven't broken the upside. We're just still inside these smaller ranges extending. So we still have one more opportunity for this to run back up into here in the premium of the premium to run back down here. If it doesn't, and this just eats up, just comes right rocking into here, that's all good too. Right now you're bearish anyway, so where can we study what stuff? Sorry, I'm behind on my question, sir. Don't forget the like button, sir. The market is consolidation. Little Benzo. Yep. It's in a definite consolidation for sure, Benzo. Where can we study that stuff? ICT, go to the ICT index, type in your questions. The videos will pop up exactly what it is he's talking about. And you can study a specific question using the ICT index. If not, if you're new to his concepts, go back and study right from the beginning. Chapter 1, Season 1, Episode 1, the foreword, prologue. Read it all. Start right from the beginning and work your way through. If you try to rush this, you say, I want to be a master trader in 2 weeks. Stop wasting your time. I'll tell you right now, stop throwing your money away. Go to the casino, because that's where you're going to get just as good a chance of making money as you would here. Honestly, you should just, if you're not spending 2 years of your life at least studying his material because you want to learn this all in 2 weeks or 2 months, you're wasting your time. I'm telling you, you're going to get burned. You're going to get burned. Go study his stuff right from the core content. Each day, study it. Come here and we'll show you how to implement it. How to read price action. This is all we're doing here, is just reading price action. If you're trying to jump in on every trade that I'm pointing out here, you're not learning anything. You're just trying to grab money out of the market using whatever we're showing you here. And that's, we're going to give you a fish for the day, but if I stop here tomorrow, you've got no skills. You've got to study this stuff. You got to watch how price is acting all the time and see if you can stay on and just play it like a video game. Don't even worry about money or trading. Play it like a video game. Just put a line up there and just go, here's my sticks. I call them sticks. You just put some sticks out here and you move them around. So you put a stick out here like that and you go clone that sucker. And you go, okay, if this is going to be my entry, that's going to be my stop loss. It's going to be up here. I'm going to pull my fib tool. I'm going to start running it for a lower or whatever. And you're just going to, okay, now if this is my 50%, here's my stop loss. That's my entry. I'm going to pull my fib to here, 62%, 70%. And then, oh, it comes back and takes me out. Okay, that's how much money I would have made had I got into that. I saw the entrance. I saw the exit. And yet it makes sense that it's heading to here. Like, you've got to have an entrance. You've got to have an exit. You've got to have a fail point. You must have a fail point. If it fails, then I'm on the wrong side of this for the time being. This key level may not get hit. I'm wrong if I trade above this. And we're trading above it now. So my eye goes back up into this little trend line phantom here. I'd love to see that get busted to the upside and go up higher. Look, see, we've traded above it. So now I want to see it come back into here, find some support off of that and start pushing higher. So key level, not my interest right now. I'm bullish inside this range again. So inside that one, I'm going from here, and I want to get back up into above these guys here. If I trade below this again, right here on the close, then I'm bearish again, and this area comes back to an area of interest for me. The trend line people are just loving this. They're just building pendants in here, and they're saying this is a pendant pattern. And you know why it looks like a pendant pattern? Because it's hitting key levels. It's finding some support here inside a key level. Look at that, right up in here. I've got so many overlapping boxes now, it's hard to know which one to trade inside. Let me just clean this up a bit here. So premium, discount inside this whole range here. See how we're up in the premium of the premium? Like if you pull your fib tool here, and you'll hear me say premium of the premium. This is nothing new. Michael does this. If you were to learn about his fractal nature of trades. We have premium level and a discount level. Okay. We also have a premium of a premium level and a discount of the premium level. We have a premium of the discount and a discount of the discount level. That may seem confusing. Study his material, you'll understand what I mean. And if you're inside a premium range and you see it making this bull flag, as it were, the bull flag, draw it out, you'll see it going premium, premium, discount, premium, 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 discount, premium, and it's running between one array to the next array inside those small little compressing lunch hour. We're talking about lunch hour. We're expecting price to be consolidating during the lunch hour period, and look what it's doing. It's turning into a nice little coiled spring here, getting tighter and tighter till it explodes out of here. Pendant people, crap. Don't worry about pendant patterns and all that bullshit. Study price action and you'll see why. Oh yeah, okay, I can see why it's doing a pendant pattern there if that's what your fancy is. And if you're looking at pendant patterns, you're saying, okay, well then I expect this not to break that high. I expect this pendant thing to come like this. And somewhere in the middle here, we should meet where we could see price taking off. If that happens, look. And if there's something that validates, you go, yeah, well, I can see why you would draw a pendant pattern there, but not because it's a pendant pattern, but because price is bouncing around inside that. Because you're going to see these pendant patterns fail miserably sometimes. Trendline phantoms, they get blown to the upside and you go, oh, when it breaks through it and comes back to it and retests it, you can get short or whatever method that retail uses. You're testing a line? No, you're testing a key level, an order block, whatever, an inversion. Then come back and say, yeah, it tested the inversion again. And once it tests that, see now the body's closing above here. If it comes back and tests the inversion again, the trend line phantom is broken. And now we're looking for it. Now it's broken here. See how that, so we expect that to provide support right there. Look at that, just tap right on it. Now you want to see that continue going to the upside. And all these trend line people don't even know this is breaking yet, but you're seeing the indication for it to break right here, changing direction. I'm no longer bearish. This key level is not important to me. Sorry, Ruby, but our 700 level is not even in our equation right now because price has changed direction. It's now going bullish. And it won't go bearish until we break this on the downside. So it can run all the way back inside here, bounce around inside there some more before it finally runs up higher. If it doesn't, it's just coming up. Look at that, building liquidity right off that mean threshold again, finding support. Does that break through here? So we're in a premium of the premium now. See, there's the 25%. We're in the premium of the premium. So if I want to get below 25%, that's the discount of the premium. If I want to extend my range, I got to start blowing right out of here. Get right out of sight, and we're inside this bigger one again. and you're looking for that level right there. You want to get on top of that. Now you've broken through the premium of the large range, and now you want to get higher. And our trend line phantom people here going, oh, I sense this is a potential for a break in our phantom. Like, bullshit, we saw it right here. We knew they were going up higher right there. And we called it right as it was happening. Now everybody's reacting. They're taking their pendants. They're like, oh, the pendant's failing. Why is the pendant failing? Oh, we've got upside now. And then it slammed against them. This is staying in price action, not staying in these stupid lines that people draw out here that have no meaning whatsoever. They're just coincidence. They do not mean squat. And I know that probably rubs some people the wrong way, but 1 minute chart, man, we're seeing it on a 1 minute chart. Uh-oh, trend line people, what are you doing now? Are you waiting for all this? We saw it happening right here. Right? That sounds arrogant. It's arrogant and cocky. Sorry, I don't want to be that way. I don't want to be that way. I don't want to shoot other people's methods down. If you've got trend line phantoms and or trend lines and bat wings and all those other things that work, don't listen to me, man. If you've got something that works, stick with what works. Stick with what, don't listen to me babbling around calling bullshit to something I don't know anything about, really. I don't know how there are people come to spend all those years working on them things and they make them work. They've got their rules behind it, so I apologize. I shouldn't have said that. If it works for you and you find a method that works for you, then keep it. So I apologize. I shouldn't be hacking on retail. There's some retail people out there that really know what they're doing. So Erica, if you're still on, tell me, what did you see in here? Send me a message in Telegram. What did you see right there on that candle? Ask your MACD, your RSI. Let me know if that actually had a point right there when we were calling the reversal, change in direction. Not reversal, just a change in direction. And then support right there, what your MACD said. Did the MACD give us this? RSI, whatever methods you guys are using. I'd love to know that, because Erica and I got a thing where we want to try and see if there's a correlation between Michael's principles that you can use. And if you're an old retail trader and you're catching these reversals and you're using Michael's principles based on trend lines when they break, when to find support when they don't. And look, see how many candles went through this already, and yet it still gave us a level of support. And look at all that stuff that worked through it. So are they important still? Yes, they are. They are very important. Just know what range you're using them in. And we're now into 1241, 42. So look for 42 to 45, for 42, 45, 48 now. Dave Berry, off to meetings. Oh, sorry. I missed Dave going. See you, Dave. If you're still in, see you. Have a good day. Fernando's here. There's a guy who's studying charts, boy. He's dropping charts down in that Telegram all the time. Awesome. And Fernando, you're learning, right? You're picking this stuff up. You're seeing it so much clearer now. I could just sense the excitement in your charts when we're dropping them down. So you can tell the people in here if you want how Fernando's, how Dave, Fernando, Tommy, Lambo, all those guys are seeing these things and they're picking them up, and then they're dropping charts. Simo's picking this up. He's dropping charts. Done for the day. Off to the gym. Erica's off to the gym. I should be out of here soon too. Still need to dial in my TV entries. I need to learn to take partials. Great session, Darren. Welcome, Fernando. We are here, sir. Price action is awesome. Erica, yes, indeed, here and active. Chandra, 1 hour candle chart. If it breaks the recent down close candle, I'm fully bearish. Then I will search for the 5-minute rejection according to smart money and enjoy the cookies. All right, Chandra. Bill Bizzo, okay, sir, have a nice day. 1 minute chart, I'm seeing bearish. Duke, the FOMB's breakout in the wedge. Breakout of the wedgie. Breakout of a wedgie? Oh yeah, that was the wedge pattern. Wedge pattern breakout. Okay. Bat wings. Good call, sir. Thanks for contributing to the community. SMT divergence. SMT divergence. Wasn't sure. Let me check. Neither did Dow. What I like about price action is once you learn how to interpret it, you don't need indicators and trend lines and such. No, you don't. You've never seen me pull a trend line on here. All you see me pull is fib tools, inside ranges, looking at fair value gaps. Look at those key levels, just not letting us get any lower. Love it. Now, just calling that change in direction right there. 753. Yeah. 27 handles. Took the high out again. Watch this here. So bearish right now. Stay on price action, folks. Stay on price action. I'm bearish now inside this range until we get above here again. Sent you the screenshots. Thanks, Erica. Appreciate it. $33 likes today. Woohoo! $33 people liked what we were doing today. Look at that. Came back, tapped it nicely. Now you're between here and here, obviously, right? We just went short. It showed us that we're going short, change in direction. Came back, found support. So now that fair value gap now becomes an inversion, becomes a senior, gets promoted. Gets promoted to a senior candle. We've come down, we've reclaimed, we've hit the fair value gap. We're going to reclaim it multiple times, and you want to see it dig through it. Like drilling, like a drill. Just drill through, drill till it finally breaks through to the other side. Break on through to the other side. That song just popped into my head. Break on through, break on through. Break through here and then get back here. Otherwise, this we want to see break to the upside to continue further to the upside. So it fails for me if I break on the upside, this candle here on the body. Otherwise, that's my next target. Nowhere else, that's my next target. And it becomes more valuable the more I dig through it, because back to an old high, if you get through it, then it becomes like a buffering system. You've got strength here, and now you've got strength here to continue down, looking for these old highs back here. Yes, the discipline. Little Benzo, you got to discipline, man. If you're jumping in on these trades with me today, and be honest, if you did, then you're not studying price action. You're just trying to grab money. You're saying, "Oh, I see this guy's giving me some key levels here, and I can make some money off of this." You're not learning, man. I can see why Michael was getting so frustrated with people. You know, he'll call a level, people start piling in on it instead of, you know, I'm happy that you can be fed for a day if that's what you took. I don't want you to take any trade that I talk about. I want you to study price action, and when you see your setup come by, if you see price action like this and you stay on price action and it helps you make your trade cleaner and you can find out where it fails. I want you to have that extra bit of something in your pocket in your trade to say, I want this thing to give me some support now in terms of my trade. When it fails, I know I've got to be disciplined enough, and discipline is something that you'll have to learn in time. You have to fail enough times to get disciplined to follow your own damn rules. If you don't follow the rules, you're looking to get your ass handed to you. And you'll get your ass handed to you many times over before you go, I give up, put my hands up there. And you'll hear people like Michael and myself and all these other guys, Fernando, will tell you, discipline. It's one of those, and Russell said it very well this morning. He says, when you're trading, you've really got to focus on not only your trade, but the emotions that come along with the profit and loss that you're willing to risk, right? See how we came all the way down into this guy here? And now we're right back up through here. So if you're in here and you're aiming for here, that's your profit. Looking for this old wick back here, old high. I was looking back here. We popped through it, and look at that. We ripped all the way back through it. So now you're bullish again. Come back, find support at it, continue on. You're inside this range now. You have a discount one, and you have a premium one. You just broke through the premium one, and now you're going higher. Remember I said I would go bullish if it went above here. It did, came back, find support, look to go higher. Hello. Now, how many of you guys went short on that? I told you not to trade it, but you went short on it. So if you do, and you're aiming for this, if you were aiming for that and you got out there, you made 10 handles, whatever. Good. Then it whipped back against you, and you were like, whoo, I should be just studying price action like Darren said. Just study it. Just watch. It's Monday. It's a bank holiday. Just study price right now. If you're getting your ass handed to you here, you should be on the sidelines watching, studying. I can remove this key level. It's still an area of interest later on. You'll see it'll become an area of interest. And clean up my charts a bit here now. None of this stuff matters right now. We're in a whole new different bracket. So now you have to go to your higher time frames and look for something that supports higher time frame. Well, there ain't nothing in here. Is there a weekly chart that you could be interested in? All right. Is there a monthly chart we could be interested in? There's nothing back here. Welcome to your new higher highs. Look at that month. Look at that month. There's the fair value gap right there. See how it trades down inside it right to here. Look at that perfect entry. And then that whole month, you've just been on a run up. If you could, you talk about discipline, staying in there on a chart all the way up through here. Shoot, I'm a goo. Go to your weekly chart. Look where that sits. You run all the way down to the order block. Open up on it. Come back inside mean threshold or consequent encroachment. Discount array to the premium array. Now we've busted all the way through. I'd expect it to, I want to see this. Now that we've taken this high, we're expecting this to come back in here. If not, this is just going to keep marching higher. Everybody says, I don't want to see, I don't trust them now that we're going higher. Well, you got to, like Michael says, if we're making new highs, you got to keep trading higher until you get something that proves otherwise. So on a daily chart, until we get something that proves to the contrary, we want to see something come back into this old high here. It didn't quite make it yesterday or Friday. We want to see it trade back into here, find a level of support. On a daily chart, maybe you'd say that is these old highs here. Revisit them and looking to go higher. Then you go, so, okay, what 4-hour chart can I have? There's your 4-hour chart. It comes all the way down, fills your fair value gap perfectly on a 4-hour chart, and then starts going higher. So you got to be marching up higher on a 4-hour chart. Your perfect entry was right there. It did not break it on a body. Hit it, reacted off of it. So look for a reversal on that 4-hour, which is right here. You can see it. I can see it right in here. Look at this. See it right there, that little tiny guy? Make it really flat. See that? That's the bottom of that one and the top of that one. Body breaks above it right there. Trade back into it right here. The wicks come into it multiple times. And then you would have 8 hours, you'd be going up. There's the reversal. Take that low. This low gets taken by that low. First fair value gap you find. Rejection block, old highs. Taken now. And this is like a 1-minute chart. If this was a 1-minute chart, you'd be looking for that area to get long on right there. The moment it broke above there 3 minutes ago. That's 12 hours ago. Given the wicks would have been a, if you're on a 4-hour chart and you put that trade on there and you put your stop loss down here at 1% of your account, you come back 8 hours later and you go, okay, we're doing good. Now I can take my stop loss and I can take my projection. I can take this fib tool from here to here. Well, I'm going to get rid of this one. First one is one I want. There's one standard deviation. As soon as you hit one standard deviation, move your stop loss under break even, take a portion off there, wait for the next standard deviation, and then the next one. And now you may be saying, there's no way it's going to 18,000 or 19,000. All the time you're trading in that direction, folks. Keep trading. Pay yourself on the way up. Now you're sitting in mucho cash right now on a 4-hour chart, like we would be on a 1 minute. So you see how if you want to go away for a while, trade on a 4-hour chart. Give yourself enough room. You're still going to risk only 1% or 1/4% or whatever your risk tolerance is. Setups are still the same no matter what time frame you're on. But I tell you, you see that right there 12 hours ago, looking for this entrance right here. If you didn't see a reversal and you didn't see, oh, see you, okay, now I see a reversal happening, and then it changes on you and comes back down again. Now you catch another reversal on the way back up because you're constantly looking for this to run higher. So unless it closes below there on a 4-hour chart, you're constantly going to be saying, I'm still going long on that. You have a fair value gap sitting right here, order block, validates it. It doesn't validate until we get over here, but you've got a fair value gap here. You come back, you fill it. So that would be a contrasting one. You'd say if it trades below here on a close on a 4-hour chart, I'm going back down. If it trades above this on a close on a 4-hour chart, I'm going high. And it closed above, closed above, closed above, and then opened and was left. But you get the idea. You hear me rambling on and on. Rambling, sing my song. Around, around, around again. So anytime you see these new highs are created, you keep looking for this stuff. Then look at the range. Then look at the arrays that you're looking to run back into. There's a little guy right there. That's the discount one. We want to see if this goes back in here. I'm aiming for down here inside that range. 50%, 62%, pull your fib tool. If we break that there on the downside, look for a run back into that range. And rinse and repeat and see where you fail. Where does it fail for me? If it comes back and hits this, runs through and closes above that and comes back and taps it, you better hope it doesn't touch your stop loss. Because if you entered in here, you're about to take a stop loss from there to there. Your optimum entry is right there for a short. So if you get, and it doesn't get confirmed until you break a distinctive body candle through this, trade back up all the way to there, wick it, hit it, and then start coming lower. Watch. Body. You want to see that close in 52 seconds. If not, it may just run all the way back down to this range in one candle. Watch this mean threshold here give way. If it just comes back, taps it, and keeps going, wicks do the damage. Keep your eye on that now. And ask yourself, where does it fail? If I was going short on this now, where would it fail for me? Where's my stop loss? And what's the rule I'm going to put in there when it fails? And then follow your rules. And if it trades against you, document in your journal how you're feeling if it fails. Because that's the self-doubt, all those emotions that are creeping in. So we were calling this right in here just before it happened. We want to see this close here in 2 seconds now below here. Ooh, it literally closed. It did close below it, so it just came back up, tapped it. We're looking for further downside now. So look for your ideal entry would be right here. Right there. Bang. So now you want to see it pop off of here. You don't want to see it trade through it. You want to see it pop off there and start coming back down now. And we called this ideal entry when it was here. We're talking about it coming back up to there. If it trades through it, here's your rule. What's your emotions? What's going on inside your head right now? Where this closes in the next 22 seconds above here is the fail point. You want to see that reject off there. And it's an 02 candle. It's a nice place for a reversal. 0002, I love it. Did someone call the projection fireman? Okay, I think I gotta call her quits. Spend some time with my girl. It's a day off. It's 11 o'clock, so it's 1 o'clock. So when I leave here, this is when it usually starts to go. So right there, watch. You want to see this break below here one more time and get below this candle, come back, find support. If you're not happy with this because it's been running up, say to yourself, I want something distinctive. So look at the range you're in, ask yourself what inside this range is a premium and a discount array. What do I want to see break? If I want real confirmation that this is coming lower, I want to see the discount array break to the downside, this thing get taken out on a breaker, and then come back, trade into it, then get short. That would be a break in structure, change in direction. So we've got a change in direction for a low right now. If it runs above here, it's a change in direction again to go high. It's not a break in market structure yet. It's just a change in direction. Just changes direction based off that fair value gap there. Premium, discount inside that range. Keep your eyes on here and here. Absolute confirmation is bold candle, not just a little one. I want to see a bold candle get through here, come back up, clip this thing, and start giving it on the way down. And if you're upset because you missed all this piece in here on the run down, you're chasing price. Chasing price around the world. Look at this. I love this. All the way back down, eventually comes all the way back down, hits it right here. That candle that initiates this dip below here, we're calling all that stuff today. So beautiful stuff, beautiful stuff. Don't like these consolidations. You want to see it, tap it and go. Don't like to see them, folks. If you're in, be careful. Be careful. Not touching it on a Monday. 18,780-ish. 18,780. Yeah, so you're looking for a discount in here, Derek. But you see how they're all bullish fair value gaps? Look at Bissies. That's the SIBI. So from there to here. So key level, if I was going to put a key level card out there. Watch here, we'll call it watch here candle. Instead of a key level, we'll call it a watch here level. Now that you pay yourself at the rejection blocks, because if this goes back up, move yourself to break even and wait. Take your stress off of this. Pay yourself a little piece right now. Move yourself to break even because you don't want to see it come. It's hit here. That's been worked now. You don't want to see it come back up and revisit that. You want to see it come down into a discount range here. And then I'm going to drop the mic because if this hits my level, then it's a perfect drop mic moment because I've been nailing it today. Gotta run. Everybody's running. Okay, I'm out of here. Pay yourself at these rejection blocks. If it runs through you, you'll be like, crap, I could have paid myself even 5 handles. From here, 91 to here is 80. That's 6 handles, 7 handles, just in that little run there. Not that you want to be, you shouldn't be playing in this anyway. Anyway. You get the idea. I'm out of here, folks. Thanks very much for tuning in. If you like what we did today, hit the like button. It's not a big deal. It's just a button. It doesn't hurt you. Just lets me know that you enjoyed the show today. And you can put comments in the section below. Not very many people put comments back down there, but you can put comments in there, anything you like, as long as you're being nice. You're welcome to join us in the Telegram site after the hours. We like to post conversations and chat about stuff in there, so you can join us in there. The link's in the description above in the bio section there. And if you're new to our channel, Subscribe. We're happy to have you, and welcome to the board, and we'll welcome you to the Telegram channel as well. Until tomorrow, my friends, I will see you, and have a wonderful, wonderful day. Spend some time with your family. I'm going to go spend time with my girl. So I will see you guys.